Good evening, everybody. Still here. Daily market pulse for Thursday, December 12th, 2013. So stocks lost ground again, but today lower volume. So not quite as threatening, but still a big drop yesterday, a little bit of a pause today. I'll show you the charts, what I mean by that. Plus key psychological levels that they're trying to hold for now. So of course that makes for kind of a game being played. We did lose a distribution day on the Nasdaq. Like 5 weeks ago, I think it was the November 6th date of distribution was knocked off. Whenever you've got enough time elapsing, in this case 5 weeks worth, they become less significant, so it got knocked off. So lower volume, didn't add any, but we did lose one, but we're still in high numbers. Everything's still living below the moving average. Everything's still in a downtrend short term, but there's psychological levels of support. But as I said, I'll show you the charts and what I mean. Tomorrow, Friday, becomes very interesting, especially going into a weekend. That's kind of psychology fits in there as well a little bit. And we will certainly want to see what happens tomorrow. But anyway, let's look at the charts. Okay, you look at the Dow Jones made new lows today, dropped below the bull sash. We had a nice 3-day series of lows across here where there was that bounce, remember last Friday, and it could never really mount new highs much after that. So got just beyond 16,000 and failed. Now it's back into the 15,700 range. There's a gold line you can see I have here based on a former pivot area, dark cloud cover, which was kind of toyed around here and played and tested as well, including the 8 moving average. But it's coming right back to that area, including the 50-day moving average. So we have not seen prices in and around the 50-day moving average for quite some time. So here we are again. Let's see, 15,700. That's going to be kind of a key area. 3 down days as well. You may be looking for a little bit of a bounce tomorrow. Those are some pretty solid sized candles on the sell-off. Can still keep going. I don't see any slowing down. Those sizes right there are not slowing down. You're not seeing any spinning tops. You're not seeing doji. You're not seeing anything, Harami. You're not seeing any of that. So it makes things for a little bit of suspicion. But the S&P, the Nasdaq in particular, might be a little more influential here and giving us better clues. So let's go there next. So remember, we had a change of polarity on this breakout of this little zone here. We had a breakout, we had a test of that area, we had a test again with a bounce. Now we were essentially in a range, top side and here about 1815, the downside about 1775. So it's back to there again, lower Bollinger Band and upper. It's starting to open now. Volatility picking up in the last couple of days. Today's red candle, of course, smaller than yesterday's, but still lower, new lows formed, still room to the 50, but sitting right on a former resistance, now support, right on the polarity line. That becomes important. So when you see candles getting smaller after some selling, especially after 3 days, you're thinking maybe there might be a pause and a possible bounce or reversal. So hold on just yet. We don't know yet. That's why I say tomorrow becomes kind of important, because they're either going to bounce it higher or going into the weekend with fear of what might happen over the weekend, they may just want to sell off. So it'll be interesting to see what they do. But right now, there's no sign of buying other than the fact that it's a smaller candle and you're sitting at support, so it's kind of hard to say, okay, which way do I want to go? If you're flat right now, what do you do? Well, you have to kind of wait to see what the reaction is going to be, or you're gambling. You're maybe doing a sell stop below the low, or you're looking maybe for a buy stop above today's high, perhaps something like that. So whatever you're thinking there. Maybe you go to an intraday chart and you're looking for some better patterns there as well. So nonetheless, we are sitting right there with the trends, of course, still up, right? The 50 days still rising. There's still room to that for the most part. Of course, the highs have not been going any higher lately, but the lows still are currently for now. Let's go to the Nasdaq. Now, Nasdaq was in a reversal back to the upside a while back. It came to the 8, came up, and you see it came up to that bearish engulfing high and could not go anywhere further. Spinning top, hanging man prior day, little doji again as well. Bearish engulfing into the 20, and then today, see that little doji right there. So that's just sitting there essentially after a big sell-off yesterday going, I'm going to pause here for a little bit and try to decide what's going to happen. And just below that where the goal line is, there's a window that may act as support near the 3965 area approximately. It's holding the 20 with room to the downside still, and a trend line, of course, as well. 50-day moving average much below. That could be just a little bit of a pause going, okay. My thought is after a big sell-off, if the bulls were really going to step in, they should have stepped in. They would have, it would have looked a lot more prominent than this. Although, tomorrow could be the day. They could be slowing it down for a potential reversal when you've got a kind of a runaway train, which, one big sell-off day is not a runaway train, but certainly you get my drift. Big sell-off day, large day, to try to slow that down and turn it can be challenging. So you slow it down and then you're able to kind of go the other direction. So that's where a doji can play a role. It's usually a pause before the refresh. The refresh, however, is what? Is it up or down? Once again, going into Friday, in a weekend, what are they going to do? Are they going to break the 20-day moving average support into the next level, or are they going to bounce it back up toward the highs to retest the highs once again? $1 million question as always. So right now there's a doji, not knowing exactly what's going to happen, but right now it's living below the 8, so at least the short-term trend is down. The intermediate trends are still up, with the 20 and the 50 still rising. So that's how that works out for now. So tomorrow becomes, again, an important day as to what we're going to see next. Let's go to the TSX. Okay, TSX had fallen through support area, formed a hammer, held, fell through, hit the 50, bounce, came back up. Couldn't really mount anything. You see the upper shadows there. There was really not much force, or not enough force. There was an attempt, at least. They failed it. Of course, they failed miserably. Look at yesterday, just absolutely collapsed. Today, I get another attempt at a bounce after a big, solid sell-off yesterday. New lows, lower highs, of course. So into the lower Bollinger Band. They may pause it here. A little bit of a hammer-like formation, but not quite. So they're trying to hang on to this level right now. Let me see if this does anything at all. High, low, right into a 50% retracement from the low established back on October 8th to the highs that were established sometime in mid-November to now where we are now, 13,100. So that's a 50% retracement, which may or may not hold, but based on the size of the candle, based on the little bounce, that lower shadow, you're thinking, okay, at least the bulls are trying to step back in and maybe take this back up at least a little bit. So a break of today's low, however, probably takes us and sinks us even deeper. 13,000 would be my thought, big round number, or they're going to take it back to 13,300 once again. But it's below the 50 now, so not looking good. All right, so that's that. Let's look at the U.S. dollar, Canadian dollar. Okay, if you recall, there were multiple days of selling after it hit the 107 level. There was a dark cloud cover with another attempt and retest of the 107. So it was 3 almost consecutive days of exact highs. Failure for 3 or 4 days to the bottom here, back to where the polarity area was, 106 area. There was a breakout up. It came back. Now it's retested it. It hit the 20-day moving average as well. Today's low forms a bullish engulfing, so now looks pretty reasonable. Any kind of positive trading above 106.50 probably takes you back toward 107 and maybe higher again. So right now it is range bound between 107 and 106, we'll call it. Maybe a little bit lower, maybe 105.50. And that's where it stands. The trends, of course, are still up. The 20-day moving average pretty much depicts that fairly well. It's holding the 20 every step of the way. The 8 moving average is barely declining, and it's now closed back above it. So it's looking like it should go higher to at least, at a minimum, retest 107, you'd think. That's what it looks like right now. Of course, a break below 106, but more so 105.50 in particular takes us deeper. 105 initially, but it may take it all the way back to 104. All right, let's the euro. Euro had to come right into the 138.50 area, the former pivot you can see back in October. Came up, size of the real bodies were getting smaller, doji, bearish engulfing, and then a big fade, and it's come right back in that area again. There was no sell signals as of yesterday, but you see the size of the real bodies were not tremendous. There wasn't much energy there, plus kind of a spinning top essentially yesterday. Upper shadow, lower shadows, almost the same size on either side of the real body. Similar today, but with more of a selling feature. I didn't quite swipe at the 138.50 exactly, but close enough. This looking like it may want to start fading in an overbought position back to a lower level. Again, the 8 moving average being the minimum level. You're not going to go long until you cross into 138.50 or higher. Otherwise, you're looking for a little bit of a fade here. To the 8, maybe into the 50-day moving average, 20-day moving average as well. All right. Treasuries. Okay, Treasury is still in a declining mode, of course. Overall, downtrend is still intact. Let's see. There's the real range right there. A little bit of a breakout that occurred over on the 10th of December. Faded. Slight fade, but the size of the real body a little bit smaller again today, more like a spinning top. So it's trying to hold 129 for the time being. My thought would be that this was breakout with a little bit of a retest, a little bit of a retracement, since it was such a strong downtrend, that they'd be looking to bounce this back higher once again, back toward 130 once again. So right now they're not. It's not quite there yet, but with today's real body, the way the size or the shape of that candle from today, a little bit of indecision. They're not quite sure, or it's a transitionary state as well, which can be kind of coincidental. I think I'm going to change the angle of this thing. This is not right. Let me do this here. Pardon me while I make adjustments. Just want to make this clear and cleaner, like that. There's your trend right there. Okay, so could come down a little bit lower into 128.5 or so, possibly. Right now it's holding 129 for the time being. So let's look at the yen. The yen is creating a little bit of confusion. The yen bounced beautifully, bull sash, came all the way back down, bounced, bullish engulfing, pretty decent candle right there. Confirmed reasonably well yesterday, came all the way back to retest. So this is absolutely critical right now, that it holds or it's gone. A little bit of a divergence, that's positive divergence there, a little bullish divergence on the stochastics. The lows are going a little higher as price action is about the same across the board at support. Maybe a little bit of a clue that the bulls are going to step in and take this higher, but essentially if this starts breaking down below 965, then it's going short and going deeper. So we'll see if it can bounce or not bounce. So that's the yen. Gold is next. Gold had a nice bounce of the Morningstar formation about a week ago. It came up and through and broke out through 1250. Pulled back, held there yesterday with a bearish Harami, but not overly anxious necessarily. There's been a long-term trend, of course. We know that in gold. And so for this to just reverse and go straight up from here is virtually impossible, or it's certainly not anticipated. So a pullback to these levels is not necessarily a huge shock. So it's coming back to retest anywhere in here. In as deep as 1200 to 1210 once again. That could happen. Big deep candle. We'll see what they do after hours here and into tomorrow as well. On gold, look for a bounce. Otherwise, you're looking for a breach of 1210 into the 1200 or lower levels as well. And silver will be essentially the same. You see silver had the breakout. It closed actually 2 consecutive days above the 20-day moving average. This pullback forming an evening star formation, but holding support right here. And I did that blue line horizontally at about 1945 or so, 1950, based on the large green real body. I was assuming that might be the halfway point of that candle, might in fact be some level of support. So far it's holding. We'll see if that's the case. It was a little bit overbought, as you can see as well in the stochastic, so a little pullback would be warranted and acceptable. It might still go deeper back toward 19, just like we just saw gold as well. But look for a possible bounce anyway, or at least maybe at least a pause and then before it reverses. Let's look at crude. Okay, crude had a huge bounce off the lows. Of course, we remember that. It came back through 95 and 96, made its way back toward 99. It started to slow down by see the bodies here. Spinning tops, etc., etc. Never quite made it. Got stuck at the 50-day moving average. And I thought at that point it might just pull back. But there was a chance it could hold that support right there and take a swipe at 99, which was the real pivot area that I thought it might go to in the first place. It did immediately, then reverse, dark cloud cover. A little bit of a pause on its way back down. But there's a clear support area, as you can see here, across multiple lows, right across this 97 to about 97 and a quarter area. So pretty critical area right there. Starts breaking down below that, then you're going to see a little bit deeper drop, probably into about 96.50 to 96.65, as deep as maybe 96 is a round number. That's possible too. But ultimately, based on the formation, you'd be thinking bullishly, ultimately above 99 to 101 to 103. But let's see what this is. Right now, obviously, right now it's between 99 and 97.50, we'll call it, for the time being, until that's resolved. All right, let's take a look at, natural gas might be important. Natural gas came right into a pivot area, right into a little bit of what I thought might be resistance, and it's just kind of blew right through it. So it's obviously looking higher. Multiple green candles, very little selling at all, pretty straight up, looking maybe all the way up to 450. So it's still buying for now until you see a sell signal. There was no sell signal yesterday either. It was just, I was curious to see what they were going to do today. They opened a little bit higher. They did fade a little bit, showing a red real body, but eventually finishing much higher. And that was post inventories, of course, today as well. All right, let's take a look at the small caps. Small caps were falling apart. You see the channel that it was in, the tops were really not following the lows in terms of the steepness, and then came into a support area, change of polarity across 111.45, as well as the trend line here, the channel line, and then faded hard yesterday into the 50. Now you're seeing a bullish harami, meaning that the selling may have at least paused or slowed down right here. Looking for a possible bounce. This is what I said before. After, in this case, 3 consecutive selling days, in fact, actually 4, but really we'll call it 3, since those back-to-back spinning tops were about the same. 3 consecutive selling days, but in accelerated mode. Now there's a pause and a slowdown that typically after some selling like that, you'd see some kind of a bounce, but I would have thought that maybe the bulls would have stepped in a little more aggressively, especially at this level, to take it higher. They just really didn't. They weren't very committed. So maybe tomorrow is the day, once again. It goes back to Friday in terms of how committed will they be following this little pause here at this level, and are they committed to going higher, especially going into a weekend? Who knows? We're going to find out tomorrow. Any kind of trading below the lows for the last 2 days, of course, is going to sink you even lower to about 107 and a quarter, 107.50. That would be the next target lower. IYT. And let me go back real quick. The small caps, keep in mind, there could be a bounce. A bounce from here could take you right back to the polarity change, right there. That 111.45 area was a former resistance, now support. So you essentially got a falling off the roof here. It may come back and retest that from the downside up, and that's where the 8 moving average resides as well. So there's a trend line, 8 moving average up there, polarity area. That could be some serious resistance. It may want to go back and retest that, depending again how aggressive the bulls want to be. This is a second thought or a final thought on that one. So this is the little bit of a channel, kind of a trend, a little bit of a flag-like formation that this is currently residing in right here. A little bit of a rollover, similar thing where there was a resistance, now support falling through yesterday, and then again a little bit of a pause today, but still above a rising 50 with room to lower still. But very similar to what we just saw in the small caps in the IWM, the Russell equivalent for the ETF proxy. Retail, RTH. That's still range bound. It attempted a drop a couple days ago, and then immediately reversed back up and held the window. And that rising window that occurred 4 days ago, is still holding as resistance at this point. Now, there was a falling window today, although there's an immediate support, of course, right where it is at $60. That $60 number has been firm. It was firm as resistance and has been firm as support so far. Bollinger Bands are still tight, trying to open. Volatile move coming. Is it a muffin top? Is this part of the neckline? Watch out to see if this doesn't break down, especially with some kind of an insinuation of a continuation of the downside based on the falling window today. That this may come down below the low of 2 days ago and into the 50-day moving average right in that 59 range, possibly lower. We'll see how that goes. So otherwise it's bouncing. It needs to clear the window to go even higher back towards 61 plus, but it's not looking like that at the moment anyway. We'll see what tomorrow brings us. SMH, semiconductors. Ascending triangle, the pressure was up. It pushed through all the doji spinning top formations with a rising window a few days ago and then immediately reversed on some profit taking and accelerated. Look at the size of the real bodies. They're getting bigger, bigger, bigger. So this will slow down at some point. And you imagine it would be slowing down anywhere from between here and the lows at about 40.25 to 40.50. But this has been some accelerated selling here in the semiconductors in the last few days. We'll see what that brings us. Right now, no buy signal of any kind, no slowing of any selling either right now. So we'll see how that goes. Right now, think lower, not higher. And then the VIX. The VIX, we talked about this going into the 15, almost 16 level before it retreated with a falling window the other day. And it held above a rising 20. Rounded bottom-like formation, almost cup and handle-like formation as well. Although that's usually more reserved for more bullish-like formations up near the tops, not so much near the bottoms, but you get the idea. More of a rounded bottom formation, and so it came back toward the window the last couple of days and couldn't quite make it through that falling window that it was formed back on, what day is that? That was back on the 6th of December. That was back on last Friday on that big move in the markets. It's clearly yesterday aggressive, right, with the selling in the markets down. This came right back to the near the highs that were established before. Still living below the Bollinger Bands, which is a good sign. And then today, that doesn't look right. I know it was a little higher than that at one point. There should be a bigger candle than that. I don't know why that is. Let me see what I can do here. I'll refresh the screen. There it is. Now it's better. That's a better looking. So it made a new high right into 16. A little bit of indecision, but still closed below a rising and opening Bollinger Band as well. The red area you see there, that shaded area, that was from some previous levels that may be a little bit of concern, but really the window is the real problem. The window above up here into 1819 is really the target that's next beyond where it is right now. So this still looks like it's got room to go higher. Markets likely lower, of course, as a coincidence. Okay? All right. That settles that up. I will catch up with you tomorrow.